Hello, and welcome to a new feature from Advanced Projections. This will be a little commentary that we call news versus noise. So what we're looking to do here is give you some perspective because financial media, popular media, the financial press just is filled with all kinds of minutia and things which may or may not affect the general state of the economy. Now, of course, what you're looking for as an individual investor is where should I put my money? And we don't tell you that. What we do tell you is what is the economic background that should help you decide what you want to do with your money based on your own particular bents or preferences for investment. So here's some of the stuff that was in the noise during October. Unemployment dipped to below 4.8%. What does that mean? COVID vaccine mandates and the pushbacks against them threaten the economic recovery. The infrastructure bill, mired in partisan debates, is downsized substantially. UN Climate Summit and congressional hearings threaten the fossil fuel industries. Stock markets began the month in retreat, but ended the month at new record highs. Facebook changed its corporate identity to Meta. Third quarter corporate earnings are exceeding estimates in over 80% of reports to date. So here's a little side note. Misconception: new equities market records show that the U.S. economy is robust and growing. Well, what's really driving that? It's a bubble. The economic environment is awash in cheap cash, much of which is being spent on pumped up and overvalued speculations. Why? Because really there's no place else to put it to get a return. Now, in the news, back to the infrastructure bill. If and when the infrastructure bill passes, what sectors of the economy are actually going to benefit from that? And that certainly will not be the high flyers in the NASDAQ and so forth. You're going to see more basic industrial gains where money will be spent on projects. The Federal Reserve held no October open market committee meeting. The next meeting is just in a couple of days, November 2nd and 3rd. Now, the FOMC meets 10 times a year, skipping February and October. They're really right now at a turning point regarding their traditional mandates, which usually includes keeping inflation under control and having best employment with stable pricing. So right now, unemployment dropped below 5% due to an artificiality, which we covered in another video. Inflation is still running at a 5% plus pace for the entire year. So we expect the November FOMC report to contain at least a change in rhetoric and perhaps firmer guidance about their next steps to manage the health of the economy, now that financial system stability has been fully restored. We also believe they are concerned about speculative excesses, which remain literally out of control, and they may include comments on this within the November or December FOMC reports. Right now, leading economic indicators are strong, but they hinge on several factors, which include consumer confidence, market performance, and outlooks for manufacturing and industrial production. Now, something we just been privy to is how third quarter and fourth quarter earnings and projections are going, plus projections that companies are making themselves for 2022, which is really where the markets ought to be looking. And in 2022, companies are saying on average in the S&P 500, there will be zero revenue growth, maybe up to 1%. But right now they're projecting on average, no growth. Also, the earnings will be up very modestly in next year. So if the equities pricing does not change, if it continues to accelerate further into bubble territory, it's simply going to widen the gap between where the markets should be and where they're actually going. Here's a little tip from the side. There's a common misconception, not necessarily amongst astute investors, but in the general public. The misconception is the Federal Reserve is somehow owned and manipulated by a secretive group of wealthy global individuals and operates without ever being audited. There's certain people in Congress that keep screaming for the Fed to be audited. Well, the Federal Reserve is privately owned by over 3,000 commercial member USA banks and is audited regularly with published results. They're easy to find. They're right out on the web. And every Fed audit going back for years, decades, is available to read. These 3,000 commercial member banks are required to have at least 3% of their assets as stock in the individual Federal Reserve banking system. So that's where the ownership lies. Now, beneath the sea of equity euphoria, there are a couple of things to pay attention to. First is that a lot of money is being put into unprofitable companies. So this is an index that the Cornell Capital Group put together a couple of years ago, basically looking at an origin point just before the COVID recession, where the S&P price and this profitability or unprofitability index were united at a base level of 100. So the gains since then in the S&P, about 40% in price since then. The gains in the unprofitability index up 250%. And it was as high as 500%. So a lot of money is being thrown at companies which are not providing any kind of financial return. Now, this chart over here shows that 2/3 of all the companies in the Russell 3000 index are losing money. I'm going to move my image over here so you can see that. All right. These previous peaks coincided with massive market corrections and recessions back in 2000 and in 2009 and 10. So this pattern actually looks somewhat similar to this one. And we'll have to wait and see, if the people in charge of the money supply and interest rates are paying attention to these things, or if it really doesn't matter yet to them. We're hoping that it does matter. Last little comment here. Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. Well, I would say we're solidly in euphoria territory, and this is kind of what's been going on. This pattern since the bottom in early 2020 when the COVID correction occurred. Now, there's still many reasons to be euphoric today, among them being, well, hopefully the pandemic is really winding down and we can look towards a more normal social existence during the next several months and quarters. But there are also things going on that should tell us that the party really has to eventually end. No one knows this better than investors who have lived through the last 4 to 7 major market pullbacks. I'm one of those guys. And if you like this video, we're going to provide more details in upcoming months, but this is just a first start at a news versus noise. And if you have items that you would like us to discuss or put in perspective, please enter them in the questions below. Consider giving this video a thumbs up if you like it, and subscribe to our Newsroom YouTube channel. You can get free access to full member reports via the first link in the description by basically signing up in a no cost free trial, no strings attached free trial. And then you can take a look at what we've provided in the past. You can also join our free economic monitoring group on Facebook, and the link is in the description below. And again, we're happy to hear your comments and your thoughts. Now, one final bit of self-promotion here. Our full website contains a very comprehensive monthly collection of economic updates. In 2019, before COVID was ever spoken, we published solid evidence that a recession was on the way. We base our service on analytics, solid, by the numbers based approach. And if you detect some bias or opinions that you think are not founded in the numbers, then we're happy to discuss that with anyone that cares to provide a comment. Thanks for listening. This is what one of our subscribers had to say about us, and we hope that that opinion is shared amongst the spectrum of people who are our subscribers.